Hello, everyone. Welcome, welcome. Welcome, everyone. We'll get started shortly here. Welcome. This is our beginners class. We'll get started shortly. Welcome, everyone. Hello, Zane. Welcome, Zane. Welcome. We'll get started shortly.
Evening, David.
Hey, Kawisi. Welcome. We'll get started shortly. Guys, this is our beginners class. Hey, Gerald. Welcome, Gerald. Welcome.
Hi, David. All right.
Hello. Welcome. Guys, we'll get started shortly here. This is our beginners class. We'll get started shortly. We'll get started shortly, guys. If this is your first time, welcome, welcome. We'll get started shortly, guys. All right, guys, let's go ahead and get started. Hey, Arthur, welcome. Welcome, Arthur. All right, guys, let's go and get started. Those of you who are here for the first time, this is our beginners class. So this is for beginning traders. All right. We do this class, the beginners class, every Tuesday. All right. And we have several classes during the weeks. Every evening, starting on Sundays, we have a Forex, crypto, and futures class. All right. Mondays, we have Q&A. Wednesdays, we have a class tomorrow on trading in the zone mindset. All right. Trend following and using trading systems. Thursdays, we do stocks, options, and ETFs. And then every other Friday, guys, for the new traders here, every other Friday, we do an advanced class. All right. So think of this class as your beginners class. All right. So we'll go through some concepts this evening that you guys really need to have as you start out in your trading career. All right. Just to give you guys some background, I've been in trading, around trading for about 25 years, so a long time. All right. I was just like you, trying to figure things out. About 12 years ago, 2010, we started a company called Monster Trading Systems. All right, Monster Trading Systems. And we help traders just like yourselves get started in trading. All right, the goal is to get you guys trading the right way. Hey, Gerald, welcome. As quickly as possible. All right, without having a lot of bad habits. All right, so we're here to help. Right, the training classes, like I say, we do them about 5 days a week, every other Friday. All right. I'm going to start off. Zane, you're new here with us. Zane, do you have any experience trading? Do you have you started trading at all, taking any trades, or are you just brand new? Zane, have you been trading at all? Arthur, how about you, Arthur? Any experience trading? Or you guys brand new?
I'm brand new to it, sir.
Okay, very good, very good.
All right, thank you.
Very good. So, well, we'll get you guys up and running, okay? And then we've got new traders. All right, Zane can't hear me. All right. Okay, all right, somewhat of a beginner. Okay, all right, perfect. All right, so let's go through it. All right. All right. The first thing I always recommend for new traders, let's share my screen here, hold on. All right. Now I want to have this class be interactive. So I'm going to be asking you guys some questions. Okay. So make sure your mics, everything is working properly. All right. That's how we learn. So for new traders, all right. So for brand new traders, so whether you guys haven't taken a trade at all, whether it's 1 week of trading, 6 months, and we even have traders that have been trying to trade, right, for a long time and still trying to figure things out, all right, how to trade the right way. And you guys would be surprised, 10 years in, still trying to figure things out, all right? So we don't want that, all right? So you guys are lucky that you're here, right? That you found us because we can get you going the right way, all right? Not that you'll make millions. It's not about making millions. It's being, able to trade effectively and understand how this path of trading works. All right. So the first thing I'm going to recommend to you guys is this book. All right. It's called Trading in the Zone by Mark Douglas. Trading in the Zone by Mark Douglas. This book has helped a lot of our traders. When we do our one-on-one coaching, we give this book free to our traders. All right. When we do our one-on-one coaching. Gerald, you have this book, right, Gerald? Yeah, I think, Gerald, you have that book. Yeah, Trading in the Zone.
Yes, sir.
Yep. So master the market with confidence, discipline, and a winning attitude. All right. So it's all about your mindset, guys. So when we start to trade, it's all about your mindset. So we have to do some work on your mindset. A lot of emotions will get into your trading when we trade. You know, you're going to be using your capital, your money. So it's a bit different. All right. So your emotions will kind of run away with you, right? So we want to control our emotions. Okay. So master the market with confidence, discipline, and a winning attitude. All right. It's very important that we have the correct mindset. All right. So trading in the zone. Like I said, we provide this book with our traders where we do our one-on-one coaching. All right. You can also get the Audible book, guys. All right. So on you can go on YouTube, type in trading in the zone. There's a free Audible that you could audio book that you can listen to. You can do that this evening at the end of this class. All right. So if you guys are serious about trading, all right, highly recommend Trading in the Zone by Mark Douglas. All right. So take a picture of that. All right. So that you have it. All right. All right. Okay, so let's get to it. All right. Does anyone know, as new traders, right? As new traders, there are some concerns that new traders that we see that new traders usually have a concern with, right? When you guys start to trade, what is perhaps the biggest concern when you guys start to trade as new traders? What is the number one thing that you guys are usually concerned with? Anyone?
We expect very quick gains over a short period of time.
So very quick. Yeah, right. We want to become multi-millionaires, right? In a few months, right? So
Absolutely.
so quick gains. Who doesn't want that, right? Quick gains in a short time. All right.
When to buy and when to get out of a trade.
Yes, very good, Gerald. All right. So when to buy. That was big for me when I started years ago. So when to buy and then when to exit, right? All right. Anything else? Anything else?
Oh, yeah. I would say also not wanting to lose money as a new trader. So I think that's a fear.
Yeah, yeah. So not wanting to lose money, right? Who wants to lose money, right? Right? We want to make money. We don't want to lose money, right? All right. Not wanting to lose money. All right. Very good. Very good. Any others? Any others that you guys can think about? Some concerns, some issues that you guys getting into trading as a new trader, right? Where that you might have some concerns with.
Making sure we're using the correct platforms. So whether it's stocks, ETFs, or currency trading, making sure we're in the right on the right platform. Correct
platform. All right. And we can also add correct platform, correct process too, right? Correct process. All right. All right. Okay, so let's go through this. All right. All right. We'll start with Gerald's. Okay. So, and then we'll talk about the others, right? That Zen mentioned. All right. this is by far, right? You guys should, do you guys see my screen here? I want to make sure before I get started here. You guys should see my screen here.
No, David, we don't see your screen. I don't see your screen.
You don't see it? Oh, okay, 1 second. All right. Okay, how about now? It should say support and resistance.
Got it.
Yes. Okay.
Yes.
All right, awesome. Okay. All right. So let's go through it. Now, Zane, you new here. Arthur, you guys are new. Gerald, Kawisi, you guys have been here. But this is good to go over, you know. We have traders, even traders that have been with us for a few months, right? Some not a lot, but a few over the years, you know, they even have a hard time following this. So that's why we go through this, right? We continue to go through this over and over. All right. And Gerald mentioned it. Okay, where to buy and then where to sell. All right. So understand that that's going to be a critical aspect of your trading. All right. Right. When do we enter the trade, and then when do we exit the trade? All right. As new traders, you guys have an advantage. As brand new traders, where you haven't really traded before, all right, you have a major advantage, right? Meaning that you don't have any bad habits that we need to fix. So whatever foundation, whatever information we give you guys this evening, all right, and keep coming to these classes, all right, will be really solid, right? So you don't have to change anything. The idea is to take the information, this information will give you this evening, and build upon it, all right? Build upon it. We want to get to where we are thinking like a professional trader, all right? Actually executing like a professional trader. So we want to do things that professional traders do, all right? And there's a roadmap. There's a roadmap that professional traders use, all right? So we're not focused on how much money the professional traders make, right? That's not the goal. We want to execute the trade. So whether we're trading $1,000, $500, $5,000, all right, we want to follow a process that is systematic in nature, right? Where we're not using a lot of emotions. As you guys get into trading in the zone, you'll understand that trading is a game of math. Okay, trading is a game of math. And what we want to do when we trade is we want to minimize our losses, maximize our profits. All right. And we do that by getting out of losing trades quickly. All right. So follow me. We do that by cutting our losses quickly and then staying in the trade, in the winning trade, as long as possible. All right. So the way we trade, right, the way we make money is by cutting losses quickly. So when the trade goes against us, we are going to get out quickly. And I'll show you guys how we exit, how and when we exit the trades. All right. However, if we catch a trend, right, we call it a trend, right, we want to stay in that trend as long as possible, right, to capture all the profits. So when we trade, guys, it's a game of math. It's a game of probabilities, right? It's a game of math. It's a game of probabilities. And we know if we can keep our losing trades small, tight, right? Tight, then, and we let our winning trades run as far as possible, we can stay in this game for a very long time. All right. So as we go through this, I want you guys to be thinking, right? We want small losses, big wins. All right. So then, yeah, we want those big gains, right? We want big gains, right? So small losses, but we need to have managed losses. Okay, we are always going to have losses in trading. So understand, when we trade, we are always going to have losses. Our goal is to manage those losses by getting out quickly, but we need to know where we need to get out. All right, so let's go through it. The first thing we need to understand is support and resistance. And guys, stop me if you have any questions. All right. This class is very informal, right? We don't have any of our experienced traders here. This is for new traders trying to figure things out. So this is your time. All right. So just raise your hands in the chat or just stop me at any time to clarify, because this is important. All right. This is where everything starts. And I wish I had this information when I started. It took me years and years of trying to figure things out. So you guys are, you're lucky. All right. So everything starts, guys, with support and resistance. Okay. So all the best traders out there know about support and resistance. They use support and resistance in their daily trading. All right. So, so we need to know this information also. So support and resistance, the keys to your success. Everything starts here. Support and resistance, the keys to your success. I want you guys to take a picture of this or a screenshot. All right. I tell traders to print it out. All right. And even laminate it so that you always have it. All right. It's that important. So support and resistance, the keys to your success. All right. Understand that when we trade, we're not just randomly entering trades, and Gerald mentioned it, right? When to buy and when to sell. All right. Where to buy and where to sell. Understand that when we trade, we are traders, right? So we don't buy, we're not investors, right, guys? We are not investors, we are traders. You guys are here because you want to learn how to trade. All right. So when we trade, we have a very defined entry point and we have a very defined exit point. All right. So we don't just randomly enter the market. We have a very defined entry and a very defined exit. And that's systematic in nature. Okay. So our process has to be systematic. All right. So write this down. Write this down. We are always going to buy on a break of resistance and sell on a break of support. All right. Buy on a break of resistance. All right. And sell on a break of support. All right. Where is resistance? Right. Resistance is going to be right here. All right. Resistance is going to be right here. Think of resistance as your ceiling. So this top line right here. All right. Hey, Deborah, welcome. All right. The top line here, the green line, that's resistance. So think of resistance, right? At your home right now where you are, that's your resistance. The ceiling is your resistance. So think of this as price, right? The ceiling here. All right, that's your resistance right here. Support is your floor, right? Support is your floor right here. And that's holding the price up right here. So we have resistance right here, support right here. This is important. All right, this is important. We have buyers and sellers, guys, that are always sitting here. They're sitting here at resistance, and we have buyers and sellers that are always sitting here at support. All right. So we have buyers and sellers that are here. All right. The buyers are looking to push the price higher to break resistance. All right. And the sellers are looking to push the price lower to break support. So there's a battle between buyers and sellers. All right. So there are buyers and sellers in here. All right. Buyers are looking to push the price higher, break this resistance right here. Sellers are looking to push the price lower, break support here. When the price breaks support, that means the sellers are now in control of price. All right, price is moving lower. Sellers, they keep selling, pushing the price lower. The price breaks resistance. Buyers are in control. They've won, right? And now they're pushing the price higher. All right. So if the price breaks resistance, who has won? Anyone out there? Who has won the battle between buyers and sellers? If the price breaks resistance, who won? Who won? Anyone?
Buyers.
The buyers. Very good. Very good. The buyers. If the price breaks support, right? Who won?
Sellers.
Sellers. Very good.
But I have a question.
Mhm.
As a buyer, you want your price to be as high as possible, and as I understand, at support, the price of the security is lower. Why won't you lower the price of your security at the support level?
Oh, so you mean you would want to buy here, Zane, when the price is low? So let's say it's $50 here. All right, $50 here at support and $100 here at resistance. So you're saying, why wouldn't we buy here?
Yes.
Okay, that's a very good question. Why do you think we wouldn't want to buy here? Because that is a lower price, right? We do want a lower price, but why would we not want to buy here? Anyone? And I see this a lot with traders, right? Why wouldn't we want to buy here? To Arthur's question.
Well, I totally understand where Arthur is coming from, because it would make sense to me also to try to catch the wave back up and get in, purchase at near the support. However, there's just so much selling pressure that any trade that you might take there near support going long may be just canceled out. You'll end up taking a negative on that trade.
Thank you.
Very good, Zane. Very good. Zane, have you traded at all? You've traded. You sound like
Yes.
you traded.
I mean, I've studied trading for the last few years, couple of years, and
Okay.
I do have a few securities licenses, but I'm here to elevate my game.
Oh, okay. Okay. Which series? Well, no, I won't get into that. Oh, very good. Very good. Well, welcome. Welcome. Very good. Okay. So yeah, we can certainly use your knowledge, right? Okay. So Arthur, let's go through this, because that's where a lot of traders, I wouldn't say mess up, but just understand this and write this down, right? When the price, and Zen is correct on this, when the price gets near support, all right, I call this the danger zone, right? So sellers, we have sellers really that are looking to push the price lower anytime it gets near that support. All right. So understand that there is a battle between buyers and sellers constantly. All right. There's buyers and sellers constantly trying to push the price lower here, push the price higher here. All right. Understand that this area in here is not tradable. All right. It's not tradable. Okay. If the price breaks support, That means, all right, write this down. If the price breaks support, sellers are in control. So if the price breaks, anytime the price breaks support, the sellers are now in control. So if we're trying to execute trades, get in here, we're trying to go long, all right, in sellers territory. All right. So anywhere in here, if we try to go long, we're in sellers territory. And what I see most traders try to do is they try to go long here, all right, and push the price up to resistance. So they will buy here, all right, Arthur, and then they will take the price up to resistance. So they'll try to trade this consolidation in here.
Yes, sir.
Okay, understand that this is not tradable right here. This area in here is not tradable. What's tradable is this: when the price breaks resistance, and then when the price breaks support. Now we can short, right? So we can make money going down. We don't want to go over that this evening, but understand we can, if the price breaks support, we can go short, make money on the way down. This evening, we're just going to talk about when to enter and then when to exit. And I want you guys to think a bit differently now. All right. We do want a lower price. We do want a lower price. All right. But this is not our low price. All right. Because we're not looking at this area here. That's not our trading zone. All right. All right. Our trading zone is here when the price breaks resistance right here. So this is our low price, not this. All right. And I'll go through this. It'll make sense. All right. It will make sense. All right. So we want to buy on a break of resistance, sell on a break of support. Buy on a break of resistance. So remember that. We want to buy on a break of resistance, sell on the break of support. As traders, remember I talked about that this is a game of probabilities, right? Trading is a game of probabilities. All right. So what we're doing as traders, guys, we're constantly testing, and we're testing support and resistance. We are testing these levels. All right. Not that we take every single trade, but we're watching where price gets to that $100 mark right here and then pulls back, gets to that $50 mark at support, and now guess what? Goes back up. Same thing here. Never breaking out. If you notice, right? Hits a resistance here, hits a resistance here, hits a resistance here. The price never broke. So the sellers are holding the price down, right? Like Zin said, right? Selling pressure, right? Buying pressure, selling pressure, right? So the sellers here, right? The shorts are not able to move the price any lower because the buyers are sitting here pushing the price back up every single time. All right. So we'll let this happen. This is called consolidation. All right. Or accumulation. So we'll let this, we call this no man's land, right? So there's nothing here. So we'll let this continue to play out. All right. We only enter the trade. We only take the trade when the buyers now take control. We don't know that the buyers are now in control when the price breaks resistance. All right, so it will break this $100 mark. That's our entry to get out, get in the trade, not here. All right, so don't think about getting a low price now. All right, you will get a low price, but not here. All right, not down in this area right here. All right, so remember, just write this down. We're always going to buy on a break of resistance, sell on a break of support. All right, take a picture of this, keep it for your records. We're going to buy on a break of resistance, sell on a break of support. We're going to buy on a break of resistance because the buyers are in control. We're going to sell on a break of support because the sellers are in control. All right. I'm going to move on. Any questions on this, on support and resistance? Any questions on support and resistance? All right. All right. The next chart you guys must have, all right? You want to have this information. All right, let me share my screen here. Is the 4 market phases. So we're going to start with support and resistance, and now we're moving along, right? So we're going to start with support and resistance, and we're going to assume that the price broke resistance. All right, we're going to assume that the price broke resistance. Can you guys see my chart here? Just want to make sure. Let's see, hold on. Yeah, you guys should see it here. The 4 market phases that every trader must know. All right, take a picture of this, please. Print it when you get a chance, and I recommend you guys laminate this. All right, it is important. All right, the 4 market phases that every trader must know. All right, knowing this information will remove a lot of the stress in your trading. All right. And you almost get to the point where you can predict where the price action will go, where price will go next. All right. And that's where we want. We want to get to the point where we are absolutely flowing with price. All right. So we're going to go here. If you guys look here. All right, this is our support and resistance right here. Support and resistance right here. Here is support. Here is resistance. Just think of this area here as our previous chart. All right, support and resistance. So the 4 market phases that every trader must know. The first phase is called the accumulation phase. And we'll go through each one. The accumulation phase. The second phase is the markup phase. The markup phase. The fourth is the third rather is the distribution phase. 4 market phases that every trader must know. 1, first phase accumulation, second phase markup, third phase the distribution phase. And then the 4th phase, that's the markdown phase. Okay, that's it. That's it. That's all you need to know. Right? There isn't a 5th phase, a 6th phase. This is it. So you understand this, you get this, that's it. Right? So the 4 market phases that every trader must know. So we're gonna start with support and resistance. That's the accumulation phase at the bottom here, phase 1, markup phase. So when the price breaks resistance, guess what? Here is our resistance right here. We're gonna buy, right? That's our markup phase. That's our markup phase. Now we started a trend. All right. Within the markup phase, we have reaccumulation. Reaccumulation. Stop me if you guys have any questions. If this doesn't make sense, we need to get this. I want to get it early, right? This is your roadmap. All right. This is your roadmap. You guys get this, you'll be farther ahead than most out there. All right. So the reaccumulation. Reaccumulation always happens in the markup phase after the buyers are in control. And we know that the buyers are in control because what has happened with price? Anyone? We know the buyers are in control because what happened? What triggered that? Anyone?
Price is going up.
Price is going up. Very good, Gerald. But what else did price do? Very good, Zane. It broke resistance. The price broke resistance. So just understand, this is very, 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 very important. Nothing happens, okay, until the price breaks resistance. And after you guys do this for a while and you start to watch the price, and we'll go through some live examples, you'll notice that buyers jump in, and they'll jump in pretty heavy, guys. We'll get really big, large candles when the price breaks resistance. All right, so you'll see a rush of buyers jump in, right, when the price breaks resistance. All right, so we want to get in right when the buyers are getting in. Doesn't matter who they are. It could be hedge funds, big institutions. It doesn't matter, right? All we know that, hey, they're jumping in, they're getting in. Guess what? We want some of that action too. We want to get in also. All right, so when the price breaks resistance here, we've got buyers coming in, right? We know that buyers are in control because the price, that's our trigger. The price broke resistance, all right? And now we're in the markup phase, all right? We have a second area to buy, right? To enter, and that's that reaccumulation phase. Okay, so understand, when we get into that markup phase, price doesn't just go up, right? Forever, it has to rest. It has to consolidate, all right? Again, right? We'll get new support and resistance lines, okay? If the price breaks resistance, all right, that's new buyers that are entering the market. Okay, so just remember, every time the price breaks resistance, that's our trigger to buy. Buyers are buying, we get in, we buy too. We don't want to miss that price action, right? So reaccumulation means we got new buyers entering the market. Price broke a new resistance, all right? And we are going higher. So this is an area where we could add to our position. This is also an area where traders that missed this opportunity right here, all right, they're looking at this as a second area to buy. All right, that's the reaccumulation. At some point, guys, because price doesn't go up forever, all right, it's going to make a high and stop, all right? We call that the distribution phase if the price breaks support. Okay, so here is the support line. If the price breaks support, all right, that's the distribution phase. And then what would we have to do if we bought here? Anyone, if we bought here on a break of resistance, what would we have to do here if the price breaks support right here in that distribution phase? Anyone?
Sell as an option.
Very good. Sell, right? So we would have to sell, exit, close the trade. All right. So we would have bought here when the price breaks resistance, and then we would sell here when the price breaks support. Okay. So look at this. So Arthur, to your question, right? Why can't we buy at the bottom? Right? Look here. Look here. So that's not clear. Hold on. Hold on. Okay, so we're going to buy here on a break of resistance, and we're going to sell here on a break of support. This is our trade every single time. Every single time we're going to buy on a break of resistance because the buyers are in control. We're going to sell on a break of support because the sellers are now in control. Here is our support here, our support line right here. Here is our resistance line right here. Understand, we'll never get in at the very bottom here, at that $50 mark, because guess what? The buyers are not in control. This is sellers territory. We'll never get out at the top here. So let's say the top here is $200. All right. We'll never get out at the very top because that's still buyer's territory. We have to wait for when sellers come in. And this is hard for traders to do, right? Because we see our P&L go down, right? But we have to wait. We have to wait for the price to break support, all right? Because we need confirmation that the sellers are now in control of price, moving price lower. This is called the markdown phase. Okay, so when the price breaks support, all right, starts to move lower, this whole space here is the distribution phase. So we can do like this right here. This side is the distribution. This side is accumulation. Buyers are in control. Sellers are in control. The markdown phase, price is going lower. Within the markdown phase, we have redistribution. So when the price breaks support, and I know this is all new stuff, right? But you get it. This is all new stuff. Keep coming. All right. When the price breaks support, that's redistribution. So just like reaccumulation right here, we've got new buyers entering the market to push the price higher. Here we have new sellers entering the market to push the price lower. So could you imagine, right? If we bought up in here, right, and we are not aware of this, and we're in seller's territory, right? So we holding a stock, all right, or crypto or whatever, and we don't understand, right? We are not aware that we're on this side of the trade, right? And the price keeps going lower. We don't understand what phase we're in, right? Price keeps going lower and we keep holding on, right? That happens a lot. So understanding the 4 market phases is critical, right? So we are always going to buy on a break of resistance. And you guys will hear me say that a lot. Buy on a break of resistance, sell on a break of support. That's our trade right here. Buy here, sell here, right? Why don't we want to sell up in this area here? Anyone? Why don't we want to sell up in this area in here? Anyone? Anyone? You guys are taking way too long. Why don't we want to sell up here?
What Zane said, the price could go up more.
Very good, right? Right? Right, that the price could go higher, right? Right, the price could break this resistance, so it could do this, right? Like this, just like this right here. If it breaks this resistance, guess what? We've got another reaccumulation, right? So if we get out here, guess what? This is still buyer's territory, right? And we see this a lot when new buyers come in, we've got another reaccumulation. So this reaccumulation can go higher, right? Price can go higher again, and we can get another reaccumulation, all right? So we want to wait. We need confirmation, right? We always wait. We wait, we wait, we wait, we wait, right? Gerald, you've been trading with us for a while, right? We wait for confirmation, right, Gerald?
Yeah, that's correct. We do.
Yeah, we wait, right? We need confirmation that the buyers are in, and we need confirmation now that the sellers are now in. All right. So the 4 market phases that every trader must know. All right. We've got about 10 minutes here. All right. All right. So we're always going to buy on a break of resistance, sell on a break of support. First phase is accumulation. Second phase, the markup phase. Third phase, distribution. Fourth phase, the markdown phase. Within the markup phase, we've got reaccumulation. Within the markdown phase, we've got this redistribution. All right. Markdown phase, redistribution, new sellers are entering the market. Accumulation, reaccumulation phase, right? New buyers are entering the market. All right. The next chart I'm going to give you guys. All right. Is basically what Arthur had mentioned. Right. And we call this the meat of the trade. All right. The meat of the trade. All right. Let me share this. All right. Take a picture of this also. All right. Like I said, print it out, laminate it. All right. Laminate it. Trend following, trend following, trend following the meat of the trade. All right. All right. So trend following. And that's what we do. We want trends. We need trends, guys. We need trends to do well. We need small losses, big wins. We get those big wins from trends. All right. So trend following the meat. I call this the meat of the trade. All right. We want the sweet part of the trade. All right. We understand that we are not going to get all of the trade, right? We'll never get the very bottom, all right? And we'll never get the very top. We'll never get the very bottom because that is in the markdown phase. The very bottom is still moving lower, right? So it can go lower and lower and lower. We've got to wait for confirmation that buyers are in. We don't know that buyers are in when the price breaks resistance, and resistance will never be at the bottom. We'll have support somewhere in here as the bottom. Okay. So we have to wait. We need confirmation. This is going to be your accumulation phase, right? Price breaks resistance. We're going to buy right here. We'll never get the very top because we don't know if this was the top. This was the top. This was the top. We need to wait until the price bends, calm down, right? Pull back, breaks a support level like right here, breaks that support level, and then we'll exit here because we know now sellers are in control to push the price lower. All right, so here is the meat of our trade. Here to here. That's it. Here's the meat of our trade. We're gonna buy here, sell here. Not here. We'll never get out here, and we'll never enter here at the lowest price. We do want a low price. So Arthur, we do want a low price. Right? But we want that low price to be right here where the buyers came in. This price here is lower than this price, right?
Yes.
Very well. All right. So understand, we always want to buy on a break of resistance, sell on a break of support. We want the meat of the trade. All right. Trying to get all of the trade is not possible. All right. And I see so many traders get in trouble trying to get all of the trade, right? We just want the meat of the trade. I call it the sweet part. All right. So we can't get too greedy. All right. We just want the meat of the trade. So I'll show you guys some examples. We've got about a few more minutes here. All right. So let's go to the live chart. And I like doing this because now we can see what happens, right? When we put all these together. All right. And I hope you guys took copies of those, right? Took screenshots of those. All right. So let me share my screen here. So we're going live in the market. And this is these are some trades our traders are in. All right. These are some trades our traders are in. So I'm going to go through. This is Forex, but it doesn't matter, right? It doesn't matter. We can do this on any chart, any time frame, guys. So any chart, all right, any symbol, any market, any time frame. All right. So here is my screen here. We've got support and resistance. So the lines that you guys see there on my screen, these yellow lines, that's support and resistance. These green candles, those are buyers. All right, so think of these green candles here as buyers. These red candles here are sellers. So buyers, sellers, support and resistance, support here, resistance, right? Resistance, support, right? Buyers, sellers, sellers, red candles, okay? This blue arrow here, was our buy signal when the price broke resistance. This white arrow here is our sell signal to sell to get out when the price broke support. Okay, so let's go through this. We'll go through a few of them. See if you guys were paying attention. We're back in class, guys. We're back in class, back in school. All right. So let's go through this.
So, sir, was there any profit made during these dynamical transactions?
Oh, all right. We'll find out, right?
Okay.
All right. Let's find out, Arthur. All right. So here is our accumulation phase, right? Our accumulation phase. Did the price break resistance? Yes or no? Did the price break resistance? Yes or no?
Yes.
Yes, right? Yes. So we got a buy signal here. Price broke resistance. That was our cue now to buy. So we bought here. All right. What phase is this right here? What phase is this right here? Look, you guys can look at your charts.
It is phase of a markup and accumulation.
So accumulation, very good. So this is the accumulation phase right here. What phase is this? What phase is this? This phase here, what phase is this?
It is reaccumulation.
What phase is this?
Markup.
Markup, very good. See, you're getting this. You guys are getting this. All right. What phase is this? So within the markup phase, we have new support and resistance lines. What phase is this?
It's called reaccumulation.
Very good. Reaccumulation. Very good. Now the price broke support right here. The price broke support. What phase is this now? Since the price broke support, what phase is this?
Distribution.
Distribution. Look at that. Look at that. Who's in control? The price broke support. Who is in control of price now? Buyers or sellers? Who's in control of price now? Buyers or sellers?
Sellers.
Sellers. Very good. We've got red candles. Price broke support. Sellers are in control.
Okay.
What phase is this? What phase is this?
It is markdown phase.
Markdown phase, right? Every time the price breaks new support levels, that's redistribution. So Arthur, did we bought here and we sold here? Was this a profitable trade or a losing trade?
Here we got a good markup. We earned profit. Yes, sir.
We made money, right? So did we buy low here?
We buy on the low, yeah. Not on the lowest, but when we broke resistance.
Very good, very good. All right, very good. All right, let's keep going. What phase is this here? Right here. Anyone? What phase is this here?
Okay.
Accumulation.
Accumulation, very good, Gerald, very good. So what happened after accumulation? What happened after accumulation? What happened to the price?
Price went up.
It went up, right? It broke resistance. And who is in charge of price now? Who is in control of price?
At this point, buyers are in control.
Very good. Look here, buyers are in control. Sellers are no longer in control. Buyers are in control. Green candles, right? We're in the markup phase, right? Here, reaccumulation, we could have added here. Here is support right over here. Price broke support. This is distribution. We would get out right here. So we bought here, got out here. All right.
Yes.
So look here, guys. We bought here, got out here. We waited and we waited and we waited, right? We let the sellers come in, right? So where most traders are in the trade while it's going down, we're out. When the sellers come in. Here, new accumulation, we wait. The price breaks resistance, we're gonna buy. Sellers came in, again, we're going to get out here. So we bought here, sold here, made a profit, bought here, sold here, made a profit, waited. All right, follow me. This is really cool. It makes your trading a lot easier. It's still hard work, right? It makes it easier. Accumulation again. We wait. Price breaks resistance. All right, buyers are now back in. We're gonna buy here, right? So we bought here, sold here, bought here, sold here, and now we bought here. So what are we doing now? Anyone, what are we doing now?
Holding until price breaks support.
Very good, Zane. We're holding until price breaks support. All right, so we will hold and hold and hold. So if the price could keep going like this, can go all the way up. And we only get out, close the trade when the price breaks support. So if it breaks support somewhere up in this area right here, we'll get out. We would have bought here, sold here. But let's say the price stalls here. All right, does this, break supports right here, break support right here, we'll get out here because guess what? The sellers are now in control. All right, and this could happen just like it did here. Just like it did here. All right. So understand that information we just gave you guys. It's critical. This is your roadmap. All right. And we can take this information here. I'm going to show you guys. I'm just going to go through a few of these and we're done. All right. We're done. I want to just go through a few of these. Okay. And I want to show you guys here why this is important. All right. Why this is important. If we do not get out on a break of support, right? If we do not get out on a break of support when the sellers come in, right? This is what could happen. So if we don't get out here when the selling come in, guess what can happen? Now, this, we know this is fine, right? We get in on a break of resistance. That's fine. But if we don't get out when the sellers come in here, when the sellers come in, right, guys, when the sellers come in, that could take all our profits, all our hard work. All right. So we could have done really, really well, really good. We need to protect our downside, right? So if we don't get out of the trades when the selling comes in, All right, when the sellers come in, and we'll know that on a break of support, guess what? These are major, major losses. And we'll never do well if we have big losses. We need big wins. We need big wins, right? Big wins, small losses. If you guys look here, and I'm almost done here, but I want to show you guys this. This is important, right? I want to show you guys this. If you notice here, just this one chart, and I'll end with this chart. If you guys notice here, we're constantly, as traders, we're constantly testing. We don't know what's going to happen. We have no idea. We don't have a crystal ball. Okay, so look here, look here. We want small losses, big wins. Small losses, big wins. So here, price broke resistance right here. Went up, went up, went up. Nothing really happened, right? It failed. Price broke support right here. We got out. We closed the trade. That was a loss, but it was a small loss. We had another trade, right? Price broke resistance. Buyers came in, and guess what? Sellers came back in fairly quickly. We got a sell signal right here on a break of support to get out. Yes, we got a loss here, but it was a small loss. We got another loss here, but it was a small loss. But it wasn't a big loss here. All right. And it wasn't a big loss here. We got a small loss. All right. But then look here, because we didn't stay in the trade here to capture this big loss. All right, we can now, right, we can now get in right here in this trade for a bigger win. Now I'm going to ask you guys, all right, here was a loss here from here to here, from here to here. Those are two losses here. All right. Is this, and here was a winning trade from here to here. Is this winning trade here? We're just eyeballing it, right? Is this winning trade here? All right. And here is another positive trade here. And granted, we haven't closed this trade here, right? We haven't closed this trade so far, but just based on this trade here, right? This profitable trade here, bought here, sold here on the break of this support right here. Sellers came in. And then we bought here, and we're still in the trade all the way up here. Are these profitable trades? They're both profitable, right? We know this one is profitable because we closed it. This one here, it's profitable, but it hasn't closed yet. All right. But so far, are those two trades here more profitable than these two losing trades here? Yes or no?
Yes.
Yes. Yes. And their
I think
profit,
so too.
was that, Arthur?
I think so too.
Very well.
As they and you yourself as well.
Yeah. So understand that the only way we win at trading is by getting out. Yeah, obviously we want to buy when the buyers are buying, right, on a break of resistance. But perhaps most importantly, that we want to sell, we want to get out when the sellers come in. Because if the sellers come in and we don't get out, right, we don't get out, then our losses, we have really large losses, okay? So this loss here is a small loss, but boy, it could turn into a really big loss here. And now guess what? Our two profitable trades, we need a lot more profitable trades to make up for this big loss. And if we do that over and over and over, guess what? We're not winning. We need small losses, right? Small losses, big wins, right? And the way we get small losses is when the sellers come in, the price breaks support, guess what? We get out. No questions asked. We get out. Okay. So just remember that as new traders, this will save you guys. It will save you a lot of time, a lot of years. Okay, so remember support and resistance, the 4 market phases, right? So accumulation, markup, distribution, markdown. Within the markup phase, we've got reaccumulation. So we've got new buyers entering the market. And then within the markdown phase, we've got redistribution. This is important, all right, to know that, hey, new sellers are coming into the market to push that price even lower, like here, right? Like here. These are new sellers entering the market to push that price lower. So if we're in here, right, hoping that the price is going to go higher and sellers are coming in, right? We don't want that. We want to be out. Or if we're savvy, we can short. All right. So this is important, guys. All right. This is stuff that you have to know as traders. Otherwise, you don't do this. Right? Otherwise, don't do this. Don't get into this business. We have to know this. All right. We have to know this. We have to do this. All right. So I want to thank you guys. All right. Especially the new folks that are here, Arthur, Deborah, Zane. All right. And even I tell you guys, Gerald, you guys come on here, both Geralds, Kawisi, and you guys keep coming and getting this information. And, you know, I really appreciate you guys doing that, okay? Because it takes a while, right? Even after you get it, right? Even sometimes when we trade in and we trade in our capital, it gets fuzzy. This stuff gets fuzzy, okay? So, you know, getting it over and over, getting that information over and over, it even helps me, right? When I do the training classes, it actually helps me become a better trader because I'm constantly getting that information. Okay, so I want to thank everyone for coming on. All right, we have another class tomorrow. All right, tomorrow we'll go over trading in the zone. All right, we'll go over trading systems and trend following, but we apply to the trades. All right, so we do these classes again every evening from Sundays to Thursdays and every other Friday. All right, any questions for me, guys, on any of this? Any questions? Pretty good stuff, right? Pretty cool, huh? I wish I'd had this years ago. All right, any questions? All right, awesome.
David, sorry about that. Thank you so much for the course and the free class. I do have a question regarding Fibonacci's and seeing where, if at all, they play a role in your trading. And then the second question is more of an observation. I did notice that you use the 4-hour time frame. Is that what you typically use primarily?
Yeah. Yeah. So as far as Fib, some traders like Fib. We don't use Fibonacci. We use basic support and resistance. So we try to keep everything as clean as possible. All right. So, you know, sometimes we'll bring in like RSI, but we don't use any, you know, MACD and all of that. Not that Fibonacci doesn't work. All right. Our zones, we can tell the zones by support and resistance, but Fib works great. Some, you know, traders love it. We just don't use Fib. As far as the time frames, this system here, Monster Scalper, is our Forex system. Okay, Zane. So we use the 240. We have several systems because we trade several markets. For Monster Scalper, all right, the 240 works really, really well. Okay, because we found that Forex will give us about, if we can catch a trend, and that's what we're looking for, the 240 will hold the trades for about a month. Okay, for about a month, and that's what that time frame works really well for Forex. All right, for some of our stock trading systems, we'll do a daily time frame. All right, and sometimes we'll bring in a 30-minute time frame too. So if we get in, understand the way the time frame works, and that's a good question. The way the time frame works, guys, is think of the time frame like this, right? So a 4-hour time frame will give us a basically like that's a swing trade. All right, so normally an hour to a 4-hour time frame, that's a good swing trading system. That'll keep us in the trade several days, you know, several weeks. All right, and sometime extended, like I said, it could be a whole month. However, if the price goes against us, right, even if we use a 4-hour time frame, if the price goes against us, we can get out pretty quickly if sellers come in. But we look to hold the trade. All right, smaller time frames, guess what? You're going to stay in the trade a lot less. Okay, so a 30-minute time frame might allow you to stay in the trade for a few days, right? Sometimes intraday, so within the day, and you know, you might take it overnight. A 5-minute time frame, definitely intraday, right? You're gonna get in, get out during that day. Keep in mind though, the smaller the time frame, all right, the more you have to pay attention to the trade. All right, you can't walk away. So if you're trading on a 5-minute time frame, which I don't recommend for traders, a 5-minute time frame, a 1-minute time frame, a 2-minute time frame, understand that you're basically day trading. All right, and that you have to be in front of that screen. You can't leave that screen. All right, a 4-hour time frame, so you have 4 hours. All right, so that gives you a lot of time to hold a position. We like the 4-hour time frame because we need the trends. Okay, so we need these nice trends to pay for our losses. All right, the problem with trading on a very small time frame is that you don't get a lot of trends. All right, so you in and out, and you don't give the trade enough time to build, right, and catch a nice trend, because we need those trends. We need the big trends, all right, to pay for our small losses. All right, does that help, Zane?
It does. Thank you so much.
Very good. Guys, I want to thank you guys for coming on. Keep coming back. All right, don't just come one time. All right, let that information keep getting the information. I'll say, okay, so keep coming back. All right, thanks, guys. Again, thanks for coming, and I'll see you guys tomorrow. Okay, take care. Bye-bye.
Thank you. Bye-bye.
Thanks, David.
Thanks, guys. Take care. Bye-bye now.